Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a stream check in YouTube and the Bookmap Discord Trader Lab? Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for Terrific. Thank you so much. As a reminder, I am in Costa Rica and I do have somewhat of an infrastructure issue, especially when the monkeys get frisky. So if this stream goes down, I have Bookmap support backing me up. And if you're in YouTube, especially, if there's any issues, we will try to reconnect the stream. And if we can't, there is a link in the bottom of YouTube for the Bookmap Discord Trader Lab chat. You'll be able to access the stream there. You don't have to be a Bookmap subscriber to be part of the community and take advantage of all the free education, and you will never be solicited by Bookmap. Just want you to know we have a backup plan. Now, everyone, this stream is about integrating Bookmap order flow tools with auction market theory using the volume profile. And this is done in the intraday developing time frame. It is about a top-down, in other words, higher time frame down, and then bottom up. So integrating day trading, if you will, inside higher time frames for rotational trading. Now, the actual quote time frame or rotation you operate in is subject to your individual trade plan. And in the Trader Lab, we have traders with all different, in other words, who use the Trader Lab process, if you will, and an understanding of market mechanics, how it works, how to get in alignment. But in the end, it's up to each individual to adjust this to what fits your psychology, your understanding of the market, statistical metrics that you can derive and also are available to everyone, as well as 60 PDFs are in the Trader Lab of structured trades, so you can follow these trades along, anticipate them, just like you would if you were actually trading this process. Part of trading is not predicting, it is anticipating. And then, since the outcome of any specific individual trade is random, the idea then is to look at this as a gaming process, just like the casinos operate. Casinos play structured games. They don't make them up. They're not emotionally attached to the outcome. They just play the game. And for us, the games, if you will, using the shall we say, using the gaming process as a model because it's successful, is to use only anchored inputs. An anchored input is playing the game the same way, not changing it and not having variable multiple inputs into the game. So, for example, in the casino, blackjack is just played the same way, same number of cards, shuffle the deck, and, off they go. They don't change it no matter what happens. Our nature, because we're human and emotionally wired, is to change everything and to constantly tune and tweak, because our need psychologically is to run from the saber-toothed tiger. And that need to avoid the pain of being bitten by the market or consumed by the saber-toothed tiger causes us to be motivated to continually tweak and tune. And I call that Trader Groundhog Day. Are you experiencing Trader Groundhog Day? Follow this stream and see if this doesn't make sense. Now, what I do is just one way to operate in the market. Something just went off over there. If some alert just went off, if it is a problem, let me know. So let's get to business. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this isn't a trade calling room. This is for educational purposes only, and everything you're going to see here is available to you in the Bookmap Discord Trader Lab chat. That includes structured trades, processes, high-level overview, integrating with higher time frame, understanding how the market works and how at times to get in alignment. The important key, I think, is to know that you can anticipate trades before they happen. This is not a sit at the one-armed bandit or the slot machine throwing your dollars in to see what happens. I mean, if that's what you want to do, that's okay. But the business of trading is really a different process, in my opinion. Now, grab a pen and paper. Also, this stream is available exclusively to Bookmap Discord Trader Lab chat participants for review. What's important today is I'm going to take, as we say, a little walk on the wild side. I'm going to go in a little different direction because I promised the Trader Lab participants that I would be starting to change what I share because I've been doing this for several years. There is a library of webinars available to all of you in the Bookmap Discord Trader Lab, and about 26 of them. So if you're going to look for more detailed information with real-time narration, I have webinars in there that you can watch that are up to 4 hours long of this process in real time. So if you're interested in real-time narration as it unfolds, you can enjoy that. So here we go. Now I'm going to start today, assuming things don't get out of hand, and let's take a look. This is a higher time frame chart. It's from Investor RT. And don't let all the mishmash here concern you. This is the consolidation we recently broke out of. That was our trend day up. Now, that day, when you have a breakout of something this large, and this goes back to December 14th, 2023, so a lot of energy in here. There's buy stops up here. All these sellers in this consolidation were wrong. So what happens is, see you later and squeezeteria. So this sets up a couple of things. When we broke out, our target was 57.50. And whatever this is up here, I think it was 81. There. So that's our target for this day. The next day we took it out, and now we are consolidating in here. Okay. We have targets above, and I gave you these levels yesterday, 49.06, and it's a little hard to see this, but let's just say I think it's 49.12-ish. And I asked you guys to write that down. Now we have something else. When the market goes up, and you're going to find this very stimulating, sell stops trail under the market. Yesterday was a balanced day. And I'm going to show you something in the intraday that was very interesting, but I want to take the top-down approach. What is under yesterday's low? Sell stops. Where do you think we might underline be headed today? Take out yesterday's low. What was the highest volume in the trend day up? This is like a retail price. Highest volume is an accepted price. That is 67.75-ish. I use the term ish because it's horseshoes and hand grenades. So that sets up the following. Potential shorts today. Take out yesterday's low. In other words, sell stop. So we know there's fuel. And then down here. And if we break under here, we can back potentially to here. And a trend configuration is poorly auctioned. In other words, this is an auction. Overlap. And these days will become combined. This creates something called a micro composite. All it is a combination of putting days together to see where the volume is. Like down here was the high volume for all these days in here. So we put them together. So from the top down, this is the top. Okay. Now we're going to go down to another level. I hope you're getting something out of this, guys. You finding this kind of useful, maybe? Okay, let me try this. Now, I don't usually do this because it can get ugly. So just bear with a second while I move these things around. I'm on a laptop, makes it much more exciting, let me tell you. Here we go, come on. Yo. So give me a moment. Okay. Now, this is the RTH only day session, and I want to point out how this works. This is the auction, and you'll wonder where levels might come from. I always wonder myself, but the market talks, and what I do, I don't use any indicators. Now, I'm going to share some indicators with you that might be used, but for me, I found indicators create conflict. And it's very much how the casinos operate. They don't use indicators. They have anchored inputs. Our nature as retail traders is to load indicators on because our need, and it's not even a conscious need, is to avoid pain and to squeeze out risk. We want to be right. I get it, don't you? The problem with that is they're not anchored. They're random. Sometimes it's a little of this, sometimes it's this time frame and the other one, sometimes we move an envelope over here, we change a moving it, whatever it is, pick one, right? It's all the same. Now let's look at yesterday's, this is today's RTH. Let's look at yesterday's RTH. So we're gonna look at this and we're gonna go look at yesterday. What happened yesterday? So let's go take a look. Now, so we gapped yesterday. This is called, I'm going to make sure I got the right level here. Yes. Yesterday's value area, I'm sorry, the day before yesterday's value area high. Value areas where 70% of the volume takes place. So this is considered fair. That 67 I'm referring to was the highest volume price. Think retail. Trading is shopping. And I know when you went into trading, you didn't think you're just taking the shopping cart and pushing it around in the market, but that's really what we do. Because the job of the market is to figure out what's too high, what's too low, what's retail. And the day before yesterday, this was the highest volume price. And remember, when you shop in the store, when you buy an S&P in the store, high volume is where the price is accepted. Now, the thing about this is we can move away from a retail price, and it says too low. Now I'm going to take you down in fractal. By the way, I cannot see the chats at the moment because I'm just going to say I can't. So remember, if I drop out of the stream, if you're in YouTube, click the link on the bottom. If I don't come back up when the internet comes back, and go to the Bookmap Discord chat. Hope you guys are getting some out of this. Please reserve your questions until I get this thing off my screen, and then I'll be able to get the chats back up. So, and I'm in a high time frame here just to conserve real estate on the screen. But these are Renko bars. Now, here's what I want to show you. The market opens in a gap. We get our buyer. Let's watch. Now, this is a consolidation. Now, it's not material, but this is why I use Renko bars. And this is nothing more than a way to organize material. I don't trade off of this chart, okay? But it kind of helps me organize structure. I don't need to look at it. I Bookmap. But long before I got hold of Bookmap, which was 2015, when it first came out in the public space, this is how I traded. Shorter time frame than this, basically, or shorter Renkos. These are Renko bars. So chop is a consolidation. You break low. I'm just going to show you how this might work. You pull back and test this. This is where I developed the concept of micro high volume. And I say I developed it. I don't know who developed it. I came up with it for myself. What do I know? So break, pull back. And you see me do this in the stream in microstructure. This is consolidation. Inside a consolidation is volume. If it's too expensive, I can break away from it and come back and check it. If it's still too high, I'm going to leave the store. And off I go. But here's what's important. I'm just giving you a little sense of the market mechanics. In this chop here, this thing, the highest volume was right there. You can see it in the profile. It's called a variable high volume node. I mean, I had to make a name up when I came up with this stuff. I don't know. So I called it, well, it's variable because the volume point of control, where the highest volume is for the day, started moving away. that created two things. This is called a distribution, all right? In other words, what is a distribution? And I'm kind of giving you a mini lesson in market mechanics. I thought you might find this interesting. A distribution is basically where's the outside edge of a consolidation. So where's the outside here? Where's the outside down here? And where's the meat on the bone? Retail. Is that, I'm going to ask you, does it make sense? But I can't see your response. So it doesn't make sense. So if this is the case, and this is retail, and then I fall out of a consolidation, it is saying potentially too high, and we leave the store or the consolidation. Now I pull back and I test the bottom edge of this consolidation. And you guys know lots of times when you have a consolidation and you get a breakout, we come back and check the breakout. And we can pull back inside somewhere or just come to the outside edge. That's called a low volume node. And it's kind of covered up for different reasons. This is current for today. But anyway, so low volume node. I put these on my chart and you're going to see them because they're important. What happened in yesterday's RTH? We potentially underlined, found a price that was too high and we rejected it. So write this down on your sheet. 93.75. HVN, high volume node, too high. Write this down. 89, low volume node, outside edge. Now there's one more piece. Let's move over. This dark area is the outside edge of where 70% of the volume took place yesterday. It's called value area high. So value based on auction or market profilage, as I like to think of it, and I learned it from the guy who invented it, that created it, Peter Stottlemyre, in the mid-1980s, and I couldn't do anything with it, by the way, so don't worry about that. So this is the outside edge, and it's in alignment with the low volume node. Just remember these things. Value area high. Now let's go to the other side. This is the volume point of control from yesterday. Retail, remember? This, the overnight volume point of control, is the ETH retail price. So let's think of it mentally. Retail yesterday, and in the ETH retail, nothing had changed. So if we're accepting this price, theoretically, and I like to use, because there's nothing, nothing is for sure in this business, just like when in the casino, we don't know the outcome of anything, right? It's all random. Write that down. It's random. You need to accept randomness so you don't feel psychologically attached to the outcome, even though we are emotionally triggered. Value area high, retail price yesterday, which means the highest volume. Remember, you go shopping, you want to buy your can of tuna, it's $1 in the store. Seller will sell it for $1. You buy it for $1. High volume takes place at that price. Everybody's happy. Retail. ETH retail. Now let's go to the other side. There's more, but I'm going to keep this simple. ETH low. ETH low. Where's that? Value area low. So we were trading inside of a fair area. To me, it is not a coincidence. ETH retail, RTH from yesterday retail are in alignment. ETH low in alignment. Stops under yesterday's low. And remember our target. And I'm going back to the higher time frame, and yesterday, the day before, is RTH, 67.75, not a recommendation. So this is the map. Now, I'm going to try to get everything sorted out, and I apologize for this, but I thought, it's important to see where levels come from and to not, and I don't use any indicators. What is my indication, by the way? Now, let me switch something up here. I'm going to show you something. I'm trying. Forgive me if I blow things up. Now I'm going to show you ETH. I want to show you the pieces. I know I'm taking a lot of time, but I want to do something because I haven't done this because I don't have time anymore in the stream. I'm kind of limited. So I thought we should get this in for those of you who haven't seen this before. This is to a certain extent, in the webinars that are available to all of you in the Trader Lab. The Trader Lab is a free online community of really like-minded traders, and we're all looking to leverage our collective experience. And our senior trader has 54 years. I've got going on 44 years of trading, both professionally and now as a retail trader. Neither here nor there. Notice where we are. Yesterday's low to low. So we're kind of heading south of the border, and that's the trade plan for today. Now let's come back and look at this. I'm going to show you the ETH. I want you to see how this might work. So this was that low volume node that separated these value areas, okay? This is now the ETH high. Who knows? This was that level that was too high from yesterday. So, I'm not paying that, and we left. This is the fair price. What do we do? So this is where we test in the ETH, and the ETH low, overnight low, was right there, okay? So let's look. So that just gives you the lay of the land. Here's another piece. Now this is today's RTH. Let's just take it one step further. We open. What do we test? Value area high. What do we test? Low volume node. Is there symmetry here? Is there symmetry here? This is RTH. Too high. Now I'm going to take you in the Bookmap to show you the actual trades, but this is all before the market opens. So we have a couple statistics, and I'm only going to give you a couple of them. We have approximately, in past performance, not indicative of future results. I still can't see your questions, and it'll be just in a minute. That we take out, it's about a call it over 90% probability, and you have to bet these for yourself, that will take out either the ETH high or low. Don't know which one. We have about a 95-ish, also 90+% probability. We'll take out either the first hour's high or low. And we have many more statistics, all of which you need to vet for yourself. We have over an 80% probability we will take out the overnight volume point of control, past performance, not indicative of future results, and there's more. And we have about a 70%, 70% probability we'll get to this, and there's more. That's enough. Okay, now give me a couple of seconds now to try to get all this cleaned up and get these off so I can get back to the chats. I am on a laptop, and I will tell you, if you want to abuse yourself, try doing this from a laptop in Costa Rica. Oh, get over there. Got to move stuff around here so I can see the chats. I should be able to do that in a bit. Hold on, guys. And you could let me know in the chat, was this worth the time we took? And if not, I won't do it again. But, I'm trying to give you guys as much value as I can for what we are trying to accomplish here. Okay, I've now got the chats back. How are we doing in YouTube? Are we still going in YouTube, or has YouTube, I can't tell. Okay. How you guys? You guys doing okay? Hey, give me a thumb up in YouTube. Let me know that you got some value from my review. Also, this stream is available for review if you're interested in looking at higher time frame integration. And make a note of this, guys. Context is the chassis that trading runs on, in my opinion. I'm only giving you my opinion and my experience. And it's not, it's just one way to slice and dice the banana. But if you don't know where you're at, how can you formulate a trade plan? And then we still don't know what's going to happen. I mean, that's part of the joy. But if you have a map of potential levels, and this is what we talk about in the Trader Lab, you can anticipate behavior. You cannot predict it. And we have a process of conditional statements. It's called narration, and it goes like this. If this, then that. If not, then what? So if something happens, it's like when I built trading systems, they were built on conditional statements. So I kind of took the concept of system design, and because it would take you down a branch. If you want to make a schematic of trading, and that's what trade plans are about. But when a conditional statement is triggered in alignment with the context, which is the most important piece, in other words, what's going on here? Where's the levels? Now, if you can get an alignment, now you have qualified structured trades, and there's 60 PDFs of those you can download and, study and anticipate what happens here in the stream. In the Trader Lab, we're not jumping in, like, what do they call it? I don't know. What is that, a frog getting boiled? Nothing against frogs. They got some wild frogs down here in Costa Rica, I got to tell you. You don't want to mess with them either. So this is that previous low volume node, and this is the value area high. There's the ETH high. I'm showing you now that I've transferred the price map. This is the naked volume point of control. It's a potential target. This is yesterday's high volume, and we have one down below over here. That's a 67. So you can see now where all my levels come from. Overnight volume point of control in alignment with yesterday's volume point of control. So balanced, two-sided trade anticipated, outside edge, outside edge, outside edge. There. Mouthful, big mouthful, but here we go. So now, RTH open, watch. So, nobody knows. Let me get some of this stuff off the screen. This is a correlation tracker of the NQ. We don't need to see that. I don't trade from it, but if the NQ is going down, it's not a terrible thing to know, and that's available. It's part of Bookmap. So, and this down here is the market pulse. If I have time, I'll refer to it. I don't use it in my trading. I don't need it, but you know how I feel about indicators. Our nature is to gravitate to a red light, green light. That's not trading, in my opinion. But if you understand market mechanics, you can integrate indicators. Most retail traders start out with indicators, and they're not around long enough to understand how the market works, because they think the market's a function of time frames and multiple indicators and random inputs. And if you remember the top of the stream, casinos don't work that way. Why are they successful? Because they're not doing what we do with randomness. They accept the random environment, but their games are structured and anchored. And I have a primer webinar. If you're interested in understanding these concepts, you can go and watch the primer webinar. It's free to everybody in the Bookmap Discord Trader Lab chat. You don't have to be a Bookmap subscriber to access all this information, and you'll never be solicited. So let's look at this. This yellow line is developing volume point of control. It resets to 0 at RTH open. So we're starting at 0 volume. So it's very sensitive. And what it's telling me is, what's a retail price? Now, I know, what do I know? I know, so that's the RTH open, okay? I know I am in balance. So it's possible, and again, I don't, what do I know? Possible that we're going to have two-sided trade, and I have to wait and see who takes control. Now, remember, my outside edge is up at the value area high and also that low volume area here. So this is a target and a potential area to consider a short or not. Remember, I don't know. And this is like a magnet. It's retail from the ETH, the last auction, and I have stops under the low from yesterday, which are hanging out. All the longs, remember, the longs are sitting with stops under yesterday's low, week longs. And, that's kind of what we're looking at. So let's see. First trades. And none of these are trade recommendations. You have to vet this for yourself. This is Trader Lab. Remember, Trader Lab is a community. And what's so neat about Trader Lab, I think, is you kind of get your groove. What's your groove? I like to trade for the bigger swings. It's called risk reward. If I risk 2.5, 3 points, and that's kind of my risk on a trade, per contract, 8, 10, 12 points is my objective. I don't trade this I don't want to trade in this unless I have a reason. But my context is balanced, so I'm anticipating rotations initially. So it's patience. And if you're really wired up and you got to get in, that's FOMO. One way to think about this, I think at least, and this just comes from, doing all the things we've all done. Nobody's unique here. We all do the same stuff. We all are nutty because we have, and you got to understand what creates your behaviors. Subliminal, ancient wiring run from the saber-toothed tiger. It's great for the species to survive, but not great in trading where you actually run into the fire versus away from it. You're running towards the danger, not away from it. So you're pushing against wiring. So that also creates FOMO at the same time. So these emotional states are things you're going to learn things about yourself that you never had to learn before. But if you only think on a surface level, you're not going to recognize the behavior. It takes a lot of introspection. So let's take a look. Market opens. I see my seller. This is too high. That's a variable high volume node, and it's covered up by this. Don't worry about it. This shifts lower. That is saying potentially this micro volume, you could see it here. Now, this is not actionable for me. I'm just going, what's going on, right? You ever do that? Too high. Rotate down. Now, this is too high. Let's watch. This rotates lower. So I have too low, too high. So let's watch. Retail. Watch the behavior. This is suggesting a downside rotation. Now, I cannot do anything here at the moment because I've got levels above and I got levels below. So I'm kind of going, well, okay, I want to be on the short side. What am I going to do here? Now, this is a Trader Lab short. I did not participate in this. I narrated it. Too high. I'm going to show it to you. Now, if it's part of your plan, you could take this trade. And let me tell you where your target is. It would be here. But to me, I'm thinking, well, tough. So let's watch. So I did not get involved. So we get our buyers, watch. Now, so this is a structured trade. I could not take it because of context. The thing that's very hard, and by the way, I could have taken it and taken a stop. It is what it is. I'm just saying. I didn't, though. And I narrated this in the Trader Lab. But here's my location, right? Let's watch. And again, I can't predict anything. Don't think I know what's anything. I know nothing. I am clueless. Write that down. Clueless. What does clueless mean? It means I cannot predict. I can only attempt to align with levels I've already put on the map. So I know, based on what I showed you at the open of the stream, this is too high. Now, where's my possibilities? Here's my possibilities. And I don't know. Here, because there's over a 90% probability I'll get there. And here, it was too high yesterday, but I can come back and check it. So, and this. So statistically, this, I know about that because it's what we fell out of the upper distribution in yesterday's RTH. I know the ETH high has a possibility, and I know this was too high. So this is my area for potential short. So let's watch. Now, again, I'm clueless, right? Remember the term clueless. What does it mean? Open mind. No opinions, no prediction. I only know levels. I'm going to show you microstructure. Let's look at it together. I hope you're getting something out of this. Is this a little too minutia for you guys? You know? Because this is kind of how it all works, and this is called fractals. What a fractal is I'm going down in time frame. I don't use time, I use structure. So volume tells me the story. Now, let's look at this in micro. Here's a little chop chop. This is a consolidation. I break high. That's too low. Here, chop chop. I break high. Notice where I come back. I'm showing you now in the electron microscope world. Too low. Chop, break high. Too low. Chop, break high. Just watch. Just showing you something. It's concept, guys. Too low. Consolidation. Chop. And there's micro volume in here. If I open this up further, which you can do with Bookmap, you'd actually see micro VPOCs in here. Remember high volume nodes? It's all the same. Think Russian dolls. I'm down at the electron microscope level. Chop, chop. Too low. Break high. Going north, Lewis. Level. Level. No clue. Chop, chop. Break low. Too high? Question mark. Chop, chop. Break low. Too high? Too high? Question mark. Buyer? By the way, I saw this and I saw this. I couldn't do anything with it, okay? It's a short. And here's why. Now, it's a short I didn't take. I posted that in a Trader Lab because I'm asleep at the switch. How do I know it's going to do this? How about no way to know? So, life in the fast lane. Value area high, low volume node. Is everybody tracking so far? This is a short that I could not take. And it's okay. It just shows me now I got information from the auction and I got an understanding that, okay, I found an outside edge potentially. Are you guys tracking? Okay, remember, if you're in YouTube and you got something out of this and you're getting something out of it, please give a thumb up. Need the thumbs. It's important. So while you're sitting there, and if your head hasn't hit the keyboard yet, maybe your head will hit the thumb up thing. I'd appreciate it. So this is too high. This is micro high volume. This is your seller. The only way I can get into this is if it pulls back. Otherwise, I have nothing to do. So let's watch this. Let's continue. Now, right here, we're going to label this. So variable high volume node, it's actually there, but I can't label it. Here, here. I'm sequentially what's happening is, let's look at the volume. Too high. Now this, who knows? Value area, right? Low volume node. So you already know from the higher time frame why we were looking at this level. This, they cheated. They got in ahead of us. Sweep. So, right here. So too high, right here. Too high, label it. This is a progression of volume or retail pricing. As the market's trading, where the high volume is, and just remember when you shop, high volume is a retail price. This yellow line and all the volume profile is price and volume. There's nothing more to it, you know. There's a little thing in the bottom of Bookmap that has a thumb. If you see that, if you could click that for the thumb up on, if you're finding this part of the stream useful today. And if you missed the top of the stream, I'm in the higher time frame and I lay out the price map prior to RTH open. And I also review the ETH, which sets everything up for today. And if you're visiting the stream for the first time and you're in YouTube, you'll be able to review this. So take the link, copy the link for today's YouTube stream, and it'll be available to you for 24 hours also. Kind of a gift from the Trader Lab. So let's watch this. So the market breaks. This is too high. Okay, and this little microstructure up here, let me just show it to you so you see how this works. Remember, too low, too high, break, suspect, test, too high, break. This is a short, except this. Now it ran away. So now I've got to find another location. So, too high, And we're only in a minute and a half, okay? So you could kind of see. So let's look at this thing. Now, market goes down. Where's our target down below? You do remember, right? What was retail? This and this. So the short, which now there is another entry right here. This is a Trader Lab structured trade. So we couldn't get on this. But let's look. Too high, too high. Variable high volume node right here. Pull back here. This is the same. This is a fractal. So when we break and pull back to the micro volume, which you can see right there, it's the same. And this is a fractal or higher time frame is pulling back there. Same trade, different time frame. And I don't use the clock, but I'm using the terminology. This is a short, no condo. This is the same structured trade, different location, short here. Here's the test, short there. Trader Lab structured trade. Target here. Is everybody tracking so far? This is a structured trade in the Trader Lab, and you guys can download. There's 60 PDFs of these if you're inclined. Are you guys tracking? By the way, if you're in YouTube, if you got questions, post them. There is a bit of a delay in YouTube, but I will do my best to answer them as they relate to what I'm attempting to do here in the stream. So, no bueno up here. I wanted to show you another piece. Notice the liquidity here. Let me show you. This is a sweep of the Bookmap. Okay, so they swept the book. Let me see if I got this going here. Target is here, don't forget. So when you put that trade on in the Trader Lab, that's not what I wanted to show you. This. So this is a Trader Lab short here, okay? And there's your test. So it's either here or there. Short in the Trader Lab, you're going for this. That's a structured trade, okay? This is a price check. So, but basically what we did in microstructure, it was too high. We rejected it. This is now checking retail in the ETH and yesterday's RTH. Is that logical? Just wanted to know where it comes from. So let's watch. Now, this is called VPOC migration. It's a fractal. What it's telling me is this volume up here is too high. I'm not paying that. Pricing has been lowered. Watch. You're going to go, really? Yeah, really. Watch. Where do we come back? Huh. What a coincidence. Variable high volume node. Is everybody tracking? I have no indicators. What is my quote indication? Participant behavior and volume. This price is too high. We're not going to pay it. Now retail and more volume is here. But you being the astute shopper, and you are a great shopper, I know you are, you're going back to this store because you like to shop here. But nobody wants to pay this price. And you're going, nah, that's too high. I'm going back here. Short, and oh, look at that, the mid. What a coincidence. Are we selling because it's the mid, or are we selling because it is the mid? And what's the primary input? This. Too high. Now, it can do anything. You know, it could go out further. It could come back. It could do anything. I mean, this is part of the joy. So since we cannot predict, all we can do is align. Now watch. If you sell this, it's too high. What might be too low? See the symmetry? So short from here to here. Now let's continue. Is everybody seeing the short? I'm not paying that. Yeah, but, and we don't know what's going to happen here. What we know in the trader lab is price check, price check. Now, here's what happens. Short, scale, and in the trader lab, we discuss a 2-lot minimum configuration so you can get risk neutral, and you have to vet these for yourself. It's just think about the psychology. If you sold this and nobody gets this, you'd be short here, you're going for this. So that's your scale. Your stop can stay here. So, and the worst that happens, assuming you don't take a full stop, and we do, nobody's immune to stoppage. It's part of the joy. I consider it. And here's the way to change your feeling. Now, you're going to feel it, by the way. I mean, we all have an emotional attachment. But the business of trading has nothing to do with how you feel about it. The casinos play a game, structured games, and we're basically playing structured setups, same business. They use anchored inputs. Most retail traders do not use anchored inputs. They use random inputs, and they're constantly trying to fix random inputs, but they don't understand gamblers are playing randomly also, and the house is not using random inputs. If the gambler walks out with a suitcase of cash, call it 100,000, what does the casino do? Do they change the blackjack game so the next time they win? No. They played exactly the same way. It's the only way they can use anchored inputs to have an edge. If you want to have an edge in trading, you accept the random outcome of each individual interaction with the gamblers or each individual hand. But over time, because you're not doing what the gamblers do, even though you have no control over the cards coming out of the deck, just like we have no control over the other participant behavior, and they have no control over the gamblers' play, what they do, if you ever sat at a table, blackjack, and the guy next to you draws a card or whatever happens, how that can impact you. And how many of these guys you see draw cards and they shouldn't be doing anything. It all comes into the mix. You can't control the play. That's what I'm trying to say. So how does the casino experience it? Cost of production and overhead, not a personal failure. They don't change the game. That's in trading, in my opinion. We're in the gaming business. So the short part of the game is to short the scale. And the risk neutral concept is to let you get taken out here and scratch. Your broker sends you a gift basket. By the way, have you ever gotten a gift basket from your broker? Now, what happens here? Variable high volume node. Looks like my levels might be out of whack here. I'm not sure what's going on. I'm not sure about what's going on with these things. So I got to check this out. So, okay, let's watch. Notice where we come. Variable high volume node. So let's come back to the yellow brick road. Right? Short. Down to here. Target. This drops down. Something isn't working right here. I think I have a problem and I can't tell. This is like I've fallen and I can't get up. So that was the short there. Okay, I got that. This is too high, variable high volume node. This drops down. Back here, that's a short to here. Okay, I'm just trying to make sure something isn't out of whack here. You guys tell me if I got something wrong here. We take this out. So this is too low, variable high volume node in alignment with this. So that's okay. Watch, okay. Variable high volume node, microstructure is up here. Too high, break, comes back to retail, comes back and checks this microstructure. Too high, breaks down, comes back, checks the microstructure. Here, too high. Something looks wrong over here. Let me just look at this. I think these are in the wrong place. I think that's part of the thing here. Let me just look. Microstructure, potential short right there. That's a short in the Trader Lab. Trying to get these levels right. I think I got something messed up here. Let me just make sure. Can't tell. Yeah, I do. IB30 is up here. So this is in the wrong place, guys. Sorry about that. How does that happen? He asks. And this is the, this should be the IB30 down here. Sorry about that. It's like, how does that happen? And you'll see why this is important. I'm getting perturbed here. Hold on. Let me try it this way. Where's the IB30 low, guys? Can you give me a number and I could just do it a lot quicker that way in Trader Lab? IB30 low, please. 81. Thank you. Is that correct? 81? $80.5. All right, I'll take it. I'll take it. Okay. And the IB high 30 was, what was that again? 89 quarter? 89 quarter? Oh, up here. Yeah. Wow. I wonder how that all happened. The mysteries. It was me. That pilot error. This is what happens when I'm on a laptop with this stuff. Okay. Let's look at this now. So this is what this says. Anyway, we know that's a short. We know this is the target. So you guys know about that. This shifts down. So what that sets up is this is a variable high volume node. So this is our outside edge. So you could kind of see too low, too high, come back and check too low. I got to label this thing again. Here, let me just get caught up. Sorry about this, guys, you know, because I like to do this in real time. I do, which I can't, but unless I can get there, you know, before the stream. But I thought today, you guys have been following the stream for a couple of years. You see me do this all the time. So it's really, can I add something in to enhance your education and understanding of market mechanics? So I kind of thought today we'd take a walk on the wild side. Watch the liquidity stacking under the book. Now we have some statistics in the Trader Lab, and past performance is not necessarily indicative of future results. And I'm going to give you just a couple. Well, one. How's that? Just one. The gift basket. So we opened, where'd we open here? I think it's higher in range. There's an 86% probability-ish that we take out either the first 30-minute high or low. If we take out the first 30-minute high or low, whichever one we take out, which was the low, then there's a possibility, hold on, .66% probability-ish that we take out the first hour low, which is called the IB low, which is down here. So we take this out, then we have the potential to take that out. And then it sets up a couple different trades. Let me move on. And there's other statistics. There's a whole boatload of them, actually. And you're all welcome to download them, but you need to vet everything for yourself. So too high, retail. So now, and we got this was a primary target coming down, which we got on this leg. So you know we're trading sequentially. Now we have more targets below. So let's go take a look at what's going on. Too high right here, too high up there. Watch. into liquidity, selling. This is too high. Variable high volume node. We break under it. Potential short against this, and your stop needs to be above here. There's the test of the volume up here, also a potential entry, alignment, high volume area. If you took this short here, this is your obstacle. This is a structured trade, but you have to have enough range. So let's just watch. This thing is like, it's like being at the rodeo. High volume area, break, support, watch, volume moves higher. This is a choppy, balanced, two-sided day. Volume moves higher. So right here, it's starting to look like we're going to press higher. There's your seller. Here's your pullback. So you have volume here, here, seller. This now is too high. That's too high. Let's watch. Structured trade in the Trader Lab here. Stop go above there or above here. Up to you. Now we're going for the IB stat. Remember, I just gave you the statistic, which is to take this out, and this is your next target. Then we're looking for yesterday's low. These are not trade, and I went over this at the top of the stream. So these targets are all laid out. You know how you get there. Follow the yellow brick road, wear a helmet. And this is our next target down below, not a recommendation. I need oxygen. Does that make sense? Are you guys tracking? Hope you're getting something out of this. I wanted to do something different today. Now, let me show you a couple other items here. Let me get rid of this for the moment. I'm going to try to show you market pulse if I can. Now, again, I don't use any indicators. And there's a reason. In the Trader Lab, my objective when Bookmap asked me to do, stream and to help with the education was to help traders understand how to trade, really. But trading is not an indicator-based business. It's really an understanding of how the market works. And if you can understand how the market works, the indicator comes after that, not before that. And it's just the nature of, you buy a toolbox and you have 100 indicators in there or whatever it is. You got to ask yourself, why are there 100? And I always thought that myself. I said, and when I first started, we didn't have these. So, when I first started trading, we didn't have this. We didn't have computers. There was no internet, which is probably hard for a lot of you to imagine. My first computer was an Apple IIe. And then went from there when I started writing trading systems, which was in mid-1980s. So a lot of this evolved, but I did the same thing you guys did, And when I first learned this stuff, I was learning classical bar charting at the CME. And so that's all about prediction, measured moves, all that stuff. So I thought the business of trading, when I first looked at it and started looking at literature, was you're in the business of predicting. So, and I think many retail traders think they can predict something. I figured out, and everything changed for me when the light bulb went off. And I got to tell you, it was a bit dim early on. After a few years of predicting, I figured out that this has nothing to do with that. This business has nothing to do with our need to know, and because that's our wiring. It has to do with gaming or randomness. Imagine if you play a statistical game and your job is not to know the outcome. Does that change your emotional response to wins and loses? Or does it at least allow you to let go of your attachment, even though you're going to feel it because you can't change your wiring? Does that change how you act on the next trade versus taking the last trade and letting it influence what you do or don't do on the next trade? The casinos don't behave that way. And there's a reason, because they throw their edge out the window. Retail traders are constantly throwing their edge, even if they ever had one, out the window with self-defeating behaviors. This is what we work on. And by the way, ETH high and low has a high probability statistic, over 90%, which I mentioned at the top of the stream. Past performance not indicative of future results. So if you're trading the short side, remember, value area low is a target, overnight low is a target, yesterday's low. Come on, Lewis. And so anything I do here is geared towards the short side and heading for this, that, and then you have to see. So, and it doesn't have to do anything. Now, remember the thing about trading. It's random. Remember how the casinos operate. It's random. Can you, quote, predict that we're going to come here and stop right there? Now, it is the VWAP, but why not come there? I mean, maybe, right? Let's see. VPOC migration, potential structured trade in the Trader Lab. Let's observe this. Micro high volume structure, seller, pullback, potential short, not a trade recommendation. You got to be aware of this right here, stayed in the book. Let's watch it. And this is not a trade calling room. This is just, we're just taking a walk on the wild side. How you guys doing? How you guys doing in YouTube? Hope you're getting something from this today. By the way, as far as NQ goes, hyperhidrosis, that's interesting. You have to tell me what that is. It's the same. The market mechanics are the same in the NQ. I traded NQ for years, and I mean years, just NQ, but it was during the .com blast, and I guess that was 2000 or something like that. But can't remember anymore. But and I wasn't using this process. I was using Elliott wave, fibs, all that kind of stuff. So I was not using this at the time. I don't use any of it anymore. Doesn't mean, and see, the problem I found was I was constantly trying to fix a defective process. And the same thing happens in systems. You're doing, you're taking a chunk of data, optimizations and walk forward testing. It's kind of like driving Formula One, looking in the rearview mirror. What is yesterday? Yesterday has bearing, but what does the last month or 2 months have to do with what's happening right here? I'm going to suggest not much, because we don't trade in that time frame primarily. And even if you're a swing trader, every trade starts out in this time frame. And then you can expand it. It's like those Russian dolls. It's top down, bottom up. So this is the bottom. This is the micro time frame, micro structure. So here's what we know. Too high, I got to label it, variable high volume node. So what I do with these is I'm tracking the change in perception of value as it's represented by volume. So I know this is too high. I know this now is retail, and it might be too high. This now is retail. Right here, if I don't clear this, and I can come up here and take the stops. If I come out here, I also know I'm looking to sell it back to here. If I can't get above here, I know I can come down to this liquidity, and then I got to see what happens over here. Either the sellers are going to take on this resting liquidity and consume it and get through it, or we're going to come down here and rotate off it, and then they're going to reload. So we don't know the behavior. So this is a Trader Lab short, not a trade recommendation, right here. And your goal, now let's go look at what you got to do with this thing. We know this is too low. So this is micro high volume right here. You can see where it is right there. So my scale is going to be right here. And then if I get through here, I'm going to my next target. If I don't, I don't. And then I'm going for this. So this is the target on this trade, not a recommendation. And again, if I get taken out, so I have to scale ahead of this structure, which is represented by that, which is high volume. Let me see if I can show you what it looks like. So you see how to use Bookmap. This is the chart volume profile. I can isolate the volume. Only what I see here is represented here. So I can zero in right here and see the volume, which you can see is there at the top of the arrow. This acts the same in a fractal as that. So it's the same thing. This drops down, it's saying that's too high, and this was too low in the fractal, right? Is everybody with me? So now we're just working a short here, not a trade recommendation. I have more stops in my career than I can count because I've been doing this going on 44 years. So it just means I got more practice and have made donations to the Floor Traders Retirement Fund. So this is our micro high volume. We need to scale in front of that volume because if it's too low, we're going to rotate off it. So it's a very tight trade. If it's in your plan and you anticipate it, which you would in the Trader Lab, you are looking at this too high. Test. Let's go back. Too high. Come down. Where's the volume? Too high. Break. Where's the volume? Too high. Break. Where's the volume? Microstructure here. Developing the higher time frame, volume point of control there. So when you have this seller, theoretically, this is too high. This drops down, potentially too high. Seller. Now, what happens in here? If it gets through here, hasta la vista, baby. Catch you later. Because then we're going to squeeze potentially. And all that would do for me, maybe, and I use the term maybe because I don't know, is look for it to come back outside and potentially rotate. So I know there's stops at VWAP and mid. So if I put a trade on, then, I take a stop, I take a stop. I take stops every day. Why? Because that's how I protect my account and I go on to the next trade. It's almost like waiting for buses. If you don't want to take stops, then you shouldn't be in the trading business. It's like, do casinos not want to lose? The only way they can't lose and pay the gamblers is if they don't operate and they close their doors. So if you're in the trading business, you really have to look at stops in a different way. It's just overhead and cost of production. I'm not saying you won't be emotionally attached and have a disappointment and all that jazz. I can assure you the dealer doesn't get bummed out if somebody leaves a deal the next hand. Can you think like that? It's not in our nature, by the way, but it is the business of trading. Just want you to be conscious of that. So let's watch the behavior. Remember, we've got this down here, and we have to clear out this liquidity. See the buy icebergs, sell stops. So the buyers were here. We came up. VPOC migration. Retail is here. So right now the fair price is in this area. This is a potential short, not a recommendation. If we squeeze out these guys, we can take the stops out above here. You always got to think from both sides. If we can't get above here, then we're going to attack this. And remember, you got yesterday's low here. If you're going to vote, does anybody think we're not going to take out yesterday's low? And there's no guarantee we will. But does anybody think that's a low probability to take it out, or is it a high probability we get the stops under yesterday's low? If we get under here, we can accelerate. And there's our target. Write that down too. It's 67-ish, 68. And there's no reason that we can't go further, but that's not my immediate concern, you know. So let's follow the yellow brick road. Follow the yellow brick road. Follow the yellow brick road. Questions? By the way, if you're in YouTube, please give a thumb up. There's a little thing at the bottom in YouTube below the chat. There's a thumb. Please give a thumb up. It helps others find this information, so that I would appreciate that. Let's see what happens here. YouTube, are you guys tracking? So guys, by the way, if you're in YouTube, I invite you all to visit the Bookmap Discord Trader Lab chat. There's a primer webinar that I did. It's only about an hour long. It's got over 27,000 views, which is, I think, considering it hasn't been out there all that long, on a high-level overview of this process, because it's a process. Trading is kind of like process engineering, really. And when it comes to the structured trades, in those PDFs I share in the Trader Lab, plus the statistics, first of all, you got to vet all these for yourself. But it's process. So it's conditions, context, alignment, randomness. These are things, trade plans, a price map, all that's done, all this stuff's put in place outside of trading hours. The business is put together. It's like having a business plan. And then if you're a pilot, you're going to fly a plane, you have a checklist. It's all done. You don't learn to fly on, you don't jump. Pilot doesn't jump in the cockpit. Hey guys, fasten your seatbelts. We'll figure it out. Doesn't work that way, does it? If you're a professional in a sports team, what do? You watch tapes. You do reviews. You have a coach. And you go out and practice and drill. That's called replays. Circles, arrows, schematics, diagrams, piece by piece, one at a time, hours on the court, not in the game. Before you come out to play the game, you know your opponent. You know what to anticipate. You have plays set up or structured trades. That's how a professional behaves. Are you a gambler, or do you want to be in this business? Now, if you're going to be a gambler, I always suggest you go to the casino. You can play the slot machine, which is kind of what most retail traders are doing. Random inputs, throw the cash in the machine, and they win sometimes, right? But slot machine pays the best for the casinos. They got the highest edge, I think, in the slot machines. Then they're going to give you the cocktails, and if you sit there long enough, they'll even give you a coupon to the buffet. I suggest if you're going to do that in this business, it costs you a lot less to sit at the slot machine than it does to actually put real dollars on the line as a gambler. Just a personal opinion and based on some personal experience. And anyone else who's in the retail business can tell you if they're no longer in the business, which is the majority of retail traders don't last in this business. And it's real simply. And you come to Trader Lab, you'll understand they're gambling. They're not in the business. The business is gaming, not gambling. And it sounds similar, but there's a very different outcome based on how you approach this business, how you manage it, and how you handle yourself. And Trader Lab, that's what it's all about. So you're welcome to it. To come to Trader Lab, it's a great community of like-minded traders looking to leverage their collective experience. We have all walked in your shoes. The thing about it is, are you going to keep walking the same path? Or if you keep waking up a Trader Groundhog Day, you might want to derive a benefit from it. I mean, we all have done the same thing. What I find is Many of us think it's just time frames, more indicators, and tuning. That's called optimization and curve fitting. That's really what it is. And if you've ever built trading systems, you understand that process. And if you're waking up trying to get something to fit so you'll catch it the next time, that, you know, if the market is random and you throw an indicator over that 20-point rotation thinking you're going to get it the next time, along the way, in the meantime, you may put yourself out of business with that process. And I got to say, it's not a trade recommendation, and your mileage may vary, but think about it. You know, do you think that's how professional traders trade? Here's a book I want to recommend for you guys. It's called The Best Loser Wins, and it's by Tom Hogard. And I think he's got some stuff on YouTube. You might want to look him up. And he talks about retail trader behavior, you know, and why they fail. Read the book. See if you see yourself in any of that. And by the way, we all see ourselves in all of that behavior. And we're constantly drawn back because of our emotional wiring. We're constantly operating in a state of fear. So this trade here, for example, short, pullback, short, right here. So here's the possibilities. You're out here. I can handle that. Where's the stops? VWAP and mid. Let's look at our locations now. Outside edge is up here. This will be a location to observe, not a recommendation. We know we had to scale, remember? Here, high volume in the microstructure. You see what happened here? That's why, you know, if you can operate in this, that was your scale. I mean, that's as deep as this gets. After that, it's either you're scaled, you take a stop, you know, you're flat, you scratch. If you didn't scale because you're not following a structured plan into high volume, you take a full stop. And you don't throw yourself out the window. You just go on to the next trade. That's one or the other. So scratch or stop. Doesn't matter to me. My body responds, my mind responds, my emotions are triggered. I understand the business I'm in. I just have to put it aside. Now where's the retail stops? They're above this swing and maybe this swing. So I'm going to watch the VWAP and I'm going to see how far out we come. And this is a low volume area. If this is a distribution, remember what we did at the top of the stream. This is an outside edge. This was retail yesterday. It was too high. This was a variable high volume node. It is too high. This is my outside area to observe. It's not a trade recommendation. So I'm stalking, and stalking means I'm looking for a trigger out here. And then I'll tell you what the trade might be. And it's very important. You don't just, this is not mechanical. It's location based, and then I need a trigger. So if I come up, if I can get these stops out, in other words, these shorts, if I can get those guys out, that's good for me. Because if I squeeze and I get buy stops and I run out of buyers, and all it is a squeeze and a stop pick, then if I can get short, I'm coming to here for a scale, and I'm coming back to here, and then potentially on to here. All it's doing is I'm rotational here, and I'm looking for an outside edge to continue. And the market can do anything. Does that make sense? And again, not my job to predict, you know. The Magic 8 Ball went out to the factory for the special retrofit. Hasn't come back yet. So since I know I don't know, I have to operate like the casinos do in the maybe. So maybe we will come, what's this? Let's look at the structure of the profile too. Let me just show you this thing. This is a consolidation up here, right? That created this. We fell out of it. We're now operating in this distribution or consolidation. Stops are out at this outside edge above these swings. That can, and VWAP in mid. Think retail trader behavior. In fact, write this down. Think like a retail trader. Don't act like one. So if I come up here And it could be anywhere. It can be here, but I think out here is better, but it can do anything, we might only get here and then come back here. That I'm not blessed with, clairvoyance. So I prefer stops to get taken because this range is tight, but my target is this. Do I have enough range to trade this? Well, squeezer, but I can't execute well in this because by the time I get a trigger, I'm at my scale. So for me, I'm not interested. In other words, I'm not compelled to sit here and do something. I am compelled to trade where there's enough range for risk reward. Now, let's say you're in the trader lab, theoretically, and this is a structured trade in the trader lab. But part of a structure is risk reward, right? So I may look at this and go, oh, this is a short. It's not, by the way, but let's say it was. And it goes here. What does that do for me? It reinforces my skill to read. Because if you go to Trader Lab and follow a lot of the streams I've left there as part of the education, trading and volatility and et cetera, and higher time frame integration, the behavior from here to here, if it was 20 points, guess what? It's exactly the same. The range is something we need for risk reward. It has nothing to do with market mechanics. Market doesn't care, from here to here. We do to make it pay. So I cannot take a short here, but I can take a short out here in this area if it gets there and squeezes these guys out above here. You see where the stops are? Think like a retail trader. Don't act like one. Very important. Think like a retail trader. Where's their stops? Where's your stop? How do I learn this? My stop would be here with the rest of the retail traders. And what would happen to me? What happens to you? Watch. Then what do you want to do? You want to observe this area and this area right here. So we're going to look at this. This is an area. And again, clueless, right? So let's watch. Buy stops. This is the stop and iceberg indicator or detector. It's really not an indicator. It's just giving me information. Let's look. I'm going to try to get market pulse rolling for you here too. Let me just try to get this thing right. Okay, this is CVD, delta. We know the market is short, so this is showing me the sellers in this leg. This is the market pulse. This is showing me, and here's the buy volume coming in, and I don't have any divergence or anything. So this is kind of like your oscillators and stuff. Now, the thing about indicators, I'm always going to say this because we have different visitors, to the Trader Lab and to the stream. How do you use an indicator? How about the indicator is not the primary input? The behavior of the participants is. And then if you have alignment, can you use a tool to help you with timing? What do we need first? We need the behavior of the participants to come to a structure to qualify contextually to potentially come back here. So this is the trade I'm looking for. Not saying it's ever going to happen now, ever, never. So let me show you this. The market. So I'm trying to get these swings out, right? Buy stops, VWAP mid. You notice what's going on. Here's my outside edge. There, too high, maybe. I know I can come out here. Where's my low volume area? Outside edges of consolidations have stops on these edges, right? What am I looking for? Stops. Where? In here. What was too high? Here. This is my area to observe, not to shell, to observe. And I'm running out of time. They make me stop at 12 noon. Are you guys getting something out of this? This is auction market theory. using the volume profile, the distribution of volume based on participant behavior. This is structured trades based on Trader Lab, and you have to vet all these for yourself. I got 5 minutes, so you got questions now. It's a good time to put them in. I want to remind you guys that there's 60 PDFs you can download in the Bookmap Discord Trader Lab chat, as well as a library of webinars, soup to nuts, that go over this process. Start with the primer webinar. Got about 27,000 views. There must be something there that's worthwhile. And you'll get a better understanding of market mechanics, how it works, why it does what it does, and it's all random anyway. But if we can organize it, not the way other typical retail traders do, but by understanding market mechanics, it may help you develop an edge. And then the business is the business of gaming. It's not the business of predicting. So where are we? Here. What was too high? Here. What's going to happen? Clueless. Let's watch. If we get a sell structure, and where's our stops? Let's come back. Mid VWAP. This was the last price that was too high. This is retail. I'm stalking a short to here. That's the primary. Then it's put a helmet on, and I'm looking for this eventually today and down to 67. That's the trade plan for today. Write those down, and they're not actionable. They're just curiosities for you to observe. This is our outside edge. Here's our outside node. Developing value area high. All this has alignment. So now we're looking potentially for a trigger. And by the way, if we don't get a trigger, it just keeps going north. There's nothing to do. So that's why levels are areas to observe. They're not mechanical. It's what created this. It was too high. Now, if this changes, and let me take you over here, there's 15,000, almost 16,000 contracts traded here. 13,000 are up here. If we stay up here and this shifts back up here, it changes it to this is too low. If we come back and check this and it's too high, now back to retail. That's it. So let's watch. You guys know this. I'm not going to spend any more time. We now have longs. They're the fuel. So first we get the shorts out, and we're looking to squeeze the shorts. If we run out of buyers in this area, we can rotate. And if we get our sellers and a sell trigger, that's it. Then south of the border or not. So right now we've got buy stops and we got buy iceberg. So let's see what happens here. Buy stops, sell iceberg, I should say. Stops, less stops coming up. Buy iceberg. So we're watching this area in alignment. By the way, if you're in YouTube, please give a thumb up on the way out. Subscribe to the channel. Visit the Trader Lab. There's a link in the bottom. If you're interested, there's 60 PDFs of structured trades you can download. I'll flash that up on the screen on the way out. Also, a library of webinars that gives you a high-level overview of this process. It's a gaming process. It is not a prediction process. And the best you have in trading is maybe this is too high. And this is another level here. So these are areas to observe. So we are looking for a short, and if we don't get it, nothing to think about. Right here, we have 4 stops coming out. So we need buying to continue, or we are starting to potentially exhaust. This is how I use the stop and iceberg detector. I'm looking, and I got offers coming up in here. I'm running out of buyers. I'm in alignment, and I'm wearing a helmet. Not a trade recommendation. We're at a location of potential behavior. Hope you got something out of this today. This link, if you're in YouTube, grab the link. You can watch this again if you found it interesting. At the beginning of the stream, I did a high-level overview. And that kind of gives you where all these levels came from, so you could kind of see, where things are going. So let's watch what happens up in this area. This is our area to observe. So it's a location. It's not a wall. It's a potential location. So we're looking in here. This is our location. I just want to see. Now, if it keeps going, then there's nothing to do. I have no trade. Let me just flash these for you so you can see what they look like. This is available in the Trader Lab. There's a link. It gives you kind of like why, circles, arrows. These are the structured trades. You can reverse engineer, make them your own, but you have to do the work. These are actual trades I've done. By the way, I'm not a vendor. There's no course. Just one of you guys, except I've been doing it longer. I started in 1980, and maybe you could derive some benefit since we've all done the same thing. I just did it longer than you. Thanks for visiting the Trader Lab. This might be our short right here, guys. Just watch the yellow brick road. Not a trade recommendation. Hope you got something from this. Thumb up in YouTube on the way out. I'd really appreciate it. There's a little thummy thing down there. Please click it. It'll be very helpful. See you guys soon. Trade safe and visit the Trader Lab if you're interested in, if you're not getting the outcome or you're experiencing Trader Groundhog Day, I suggest maybe you visit the Trader Lab. It's a community of like-minded traders, and we're looking to leverage our collective experience. You don't have to walk this journey alone, and it does help to have others that have been in your shoes. Nobody understands this business until they've been in it, and even then, most retail traders don't last long enough to really understand it. Thanks again, guys. I'll look forward to seeing you soon, and I will be active in visiting you guys in the Trader Lab as always. Thanks again, and please don't forget in YouTube, thumb up on the way out. Appreciate